Good morning, everyone. This is John Kogan. I'm the CEO of Proformative, the online community for corporate finance, accounting, treasury, and related professionals. First, I would like to welcome everyone to this morning's webinar, or I guess this afternoon's, depending on where you are, entitled Financial Planning, Budgeting, and Forecasting, How Best-in-Class Companies Plan in Today's World. Advances in technology are creating opportunities to realize the benefits of creating better alignment of budgeting and forecasting efforts with strategic initiatives and operating in a dynamic financial planning environment. What does it mean for a company to move from a static to a dynamic forecasting environment? How are companies leveraging technology and redefining processes to offer the right data at the right time to the right people within their organizations? This webinar will offer a number of key best practices being utilized by companies on the forefront of budgeting and planning, and includes a case study of how one company has reaped the benefits of transforming from a static to a dynamic forecasting and planning process. We have a few items before we get started this morning. First off, I'd like to thank Host Analytics for graciously helping us to make this event possible. Everything that we do on Proformative is free for the users of Proformative, and it's through companies like Host Analytics and their generosity sponsoring events like this that is possible. So thank you to Host Analytics. They also have provided us some of the content for today's event, and we greatly appreciate that. A quick welcome to Proformative for those who are new to Proformative. Proformative is the largest and fastest growing online resource for senior finance, accounting, treasury, and related professionals. We reach over 600,000 of these folks on a monthly basis. This is a unique resource. Folks come online, they ask questions, they get answers from their peers. So it's a wonderful way to learn about anything on the job. Even if you've never experienced it before, chances are someone in our community, which is very large, has. And it's simply a free and noise-free exchange of information. The entire platform is free. There's no advertising, no self-promotion, etc. Please check it out at proformative.com. Next up, a few notes on the event today. A link to today's presentation and a video of this webinar will be sent out to all attendees within 24 hours of the event and is already posted on proformative.com/resources. So it's already available if you want to go out and grab it at proformative.com/resources, and we will send an email out that will have a link to the deck and a link to the video of the webinar, which we're recording right now. Next up, there are many in the audience who are pre-registered for CPE credits. If you are, then you will need to answer the polling questions. We have 3 polling questions today, and they are statistical in nature, so even if you're not here for CPE credit, we'd appreciate you taking 10 seconds and answering them anyway. And then at the end of today's event, we will revisit these questions and we'll see what everyone had to say. We don't share the names of the folks who answered, so don't worry. No one else will see your name. They'll just see the aggregated numbers in response to the poll questions. Please feel free to ask questions on today's topic via the questions box in your GoToWebinar control panel. You can ask those questions at any time. Typically, we hold questions until the Q&A period, which is the last section of this morning's webinar. However, if there's an interesting clarifying question, we'll go ahead and sneak it in as we go. Finally, when you finish today's webinar and step off, or when we shut the webinar down, you'll be asked to take a short survey. It is literally 60 seconds. We greatly appreciate the feedback. We always want to do better the next time, and your feedback greatly helps us on that front. Also, if you have any desire to connect with either of today's 2 speakers, we make it very easy to do so. Simply check the box where the box is during your taking of that short survey, and we'll happily connect you with one or both of the speakers today. A couple learning objectives. The bottom line is today we want to share a number of best-in-class practices in today's world of budgeting and forecasting, and we're going to be covering a lot of ground in terms of what companies are doing on that front, and we'll hear about what one company did from one of the folks who's in charge of budgeting and forecasting at that company. So without further ado, I'd like to go ahead and get us on that path. And starting us off this morning is Rob Friscone, Solution Consultant at Host Analytics. Rob brings to Host Analytics over 14 years of experience in business software, primarily in the enterprise resource planning space. Rob comes to Host Analytics from Lawson Software, where he was a solution consultant in Lawson's public sector group. During his career, Rob has served in a variety of finance roles and is also an expert in software revenue recognition. Rob began his career in public accounting and is a CPA. He also holds an MBA in finance. And with that, Rob, I'd like to invite you to take it away.
All right, thanks, John. Well, I just wanted to give everyone an overview today of what we're going to be talking about. Of course, the topic is financial planning, budgeting, and forecasting. But to narrow it down a little bit, I'm breaking up my presentation really into a couple of different perspectives. And one, I want to just give you our perspective on what we've seen as just the evolving role of finance. How has finance and finance departments gone from number crunchers and data gatherers and report preparers to true business partners. Number two is just talking about some best practices that can really get you there to that kind of nirvana of building those relationships with the business by being a true business partner, being involved in the strategic decision-making process. And number three is really the underpinning of the whole presentation. That's how do you leverage technology to get you there? So that's essentially what we're going to be talking about today. So when you think about the evolving role of finance, I'm sure we've all thought about it over the years in our careers. The role is changing, and it gives a little depiction of how those roles are changing. And really to kind of begin that discussion, just think about how dramatic that's been. So when I look back through my career, and I look back about 10 years ago when I was in corporate finance with a large publicly traded software company, and I remember how backwards looking our perspective was. We had so much focus on closing the books and consolidating all of the data that we barely had enough time to prepare our historical reporting for our public company reporting for the SEC, et cetera. That we had no time at all to do any real analysis, or any true, budgeting and forecasting. And because of all that, we just weren't seen as a business partner really at all. We were all focused on just reporting, those financial results. So you fast forward a little bit to now, you can see that role has changing, and the focus has changed from that of historical results and auditing to much more of a proactive, business partner approach within the organization. And I think the biggest reason for this is that the business demands it. It has to happen to survive in today's environment. It was a different world than it was 10, 15, or even 5 years ago. And the business requires that finance be its partner, to model out, to look out in the future, to help it understand, most importantly, what are the implications of all the different courses of actions going to be? What do they look like, so that you can make an informed decision, when the time actually comes. And to do all this, you need data, and the data needs to be much more real time. It's no longer good enough for to look out weeks or months. You need to be able to look at the data in a much more flexible manner, and that means you can't look at it in a single dimension anymore, like cost center and account. And thankfully, there's been advancements in the terms of technology that will make this possible. So the trend is that finance departments are moving away from focusing on historical results to focusing on driving business performance and profitability, and really driving business results. And so the focus of this webinar really is that how can finance leverage technology to enhance their evolving role as they become more involved in that strategic decision-making process. So we've talked to a number of our customers and prospects. That's what we do on a regular basis. We have discussions with them. We ask them how their businesses are going and what their planning process looks like. And so I just want to share a little bit about what we're hearing there. So what we found is there are a lot of issues that finance departments are facing, and these issues are really serving as barriers to finance departments serving as strategic partners within their organizations. And we need to break down those barriers in order to kind of propel them forward, into that particular role. So I want to just kind of walk through some of these things. So some are pretty basic in nature. With an Excel-based planning system, you have version control issues, broken links, and you have errors. And some of these errors, there have been some studies that have indicated that 80% of plans done in Excel have some kind of error that organizations don't even know about because they can't find those particular errors. So known errors and unknown errors. And what does this lead to? It leads to long nights. It leads to staff burnout because it's really just not a process. In the terms of reporting deficiencies, there's a true inability to be able to just present the information in a board quality format. And some of this is related to problems associated with getting at the data, just to have it available for reporting and analysis. And the desire to be able to quickly answer questions that management raises, be it just true ad hoc reporting tools where you can drag and drop dimensions to get an answer to a question very, very quickly without the help of IT. In addition, just being able to drive visibility and accountability through your organization by utilizing data visualization and scorecarding capabilities that are inherent in dashboards. Scenario modeling, how do we model out these large events that may or may not happen, acquisitions, new product lines, new channel partners, how do we get a view of that, with good detailed data so that we can make decisions ahead of time, that are accurate, that can add value to the business. And, finally, the strategic plans, are not really driven to operations. There's still a true disconnect between the strategic planning process done at one layer of the organization and, the operational and financial budgeting and planning process that really is done at a different part of the organization. And this is just leading to, decisions that are being made in a vacuum, since there's no real tie between these operational and strategic plans. And finally, just the need to be able to have the functional decisions incorporate operating and financial implications. So as you can see, as we solve some of the business or the process efficiency related issues, we begin to move closer to improving the overall organizational performance. So the two are really inextricably tied together. So when you think about the evolution of financial applications that kind of get us to today, we kind of go through a couple of different generations. And the first thing I want to say about all that is that technology is really helping to really change that landscape. If you think about the first generation of financial and planning applications, it really just was focused on just generating budgets, just basic data aggregation. So it's pretty basic functionality, and it didn't really allow for much time for an actual review of the data that was being entered and aggregated. If there's just a small amount of time left after all that work was done for just a little bit of review, people were typically happy. And with that came, simple consolidations, really basic, iteration control, just having the core ability to manage the process through a system, and just rudimentary dashboarding and reporting. And, most of the first generation was really, comprised of, just first generation apps, the financial apps, and Excel. That really made it up. We move into, the second generation of financial applications. And we kind of add on top of what we had in, originally. So we just kind of take the next step on top of that core system or Excel-based planning tool that, organizations were using. And we built in, some basic, modeling and, drivers into that process. So we had the beginnings of being able to analyze different scenarios or just the effect of certain, changing drivers in that process. And, certain things like, reducing operating expenses by 5% and being able to see that flow through to your business, to your P&L and your cash flow and your balance sheet. So, just the early on was just the beginnings of being able to, just get to that point where you could try to model out scenarios to, make better decisions when the time came. And again, those second generation applications were typically more advanced Excel applications, or just the second generation of the core financial applications. The third generation is really where we're at today, and what that really includes is software as a service based CPM solutions or corporate performance management solutions. And just the next generation of the overall CPM group of applications. So we've extended the functionality of financial applications 2.0, if you will, and we add some additional pieces of functionality that are really core. And it's really all about getting to fact-based decision making. So to get to this level, you need to be able to tie your strategic plans back to your operating plans. You need to be able to tie your company's strategy to the results of operations, to those financial results. And to do this, you have to have some cohesiveness between those individuals who are setting your company's strategic vision, typically executive management, and back even down to the line level managers who are intimately involved, in the preparation of the annual budget, including some of the finance team members who are intimately involved in that process. So you really need to ensure that there's a cohesiveness, if you will, between those two processes. And finally, it's about bringing back together, core finance and operations. I think gone are the days when finance can sit in the background and just report actuals. That's 10, 20 years ago or so. There's got to be an understanding as to the financial implications, what the financial implications are, as well as the operational impacts. And this really goes both ways. As changes in operations are made, let's say it's something like changes in a production run, those individuals in operations need to be cognizant of the financial implications of those decisions as well. So these impacts, also need to be able to flow up the chain, to the top. And what this all really leads to is, at the end of the day, the ultimate measurement for most businesses, I would argue any business, is its profitability. Improvement in profitability is a result of stronger ties between the company strategy and finance and operations. It involves fact-based decision making, and both of these are really the result of process improvements, and it's enabled in part by utilization of the most current technology. And again, that's really what the focus of corporate performance management applications are really all about. So where are we today? Unfortunately, we talk to a lot of businesses, a lot of prospects, and I'm always surprised at the numbers of those businesses, and some are very large that still utilize a spreadsheet-based Excel planning process for either their whole business at the corporate level or just for some of their divisional businesses. So that's still very prevalent today. So it's really the the current lay of the land. A lot of companies are still doing that. And our view on this is that Excel and the popular spreadsheet packages they're very powerful desktop productivity tools, but they're not good tools for budgeting and planning, and they're not good tools for collaboration. There's an overall lack of control, both in versions of plans or budgets or forecasts, and related to the underlying integrity of the data. What about the errors that exist, but you can't locate in that plan? And I talked about that a little bit before. They're out there. How do you measure them if you can't even find where they are, if you don't even know where they may be lurking in your plan? And that's all leads us to inaccurate data. And we've all been there. Broken formulas, added deleted in rows and columns. Locking down a spreadsheet only to find out that someone buttered up one of your finance analysts to give that password out. The lack of control ultimately leads to doubts about accuracy, and that affects credibility and affects ownership, and it really breeds distrust. And I think it's what ultimately leads to the lack of accountability for results, and it's still a large problem. If you don't trust the numbers, you're not going to own the numbers, and if you don't own the numbers, you're not going to own the results of what you're doing in your business. So let's talk about what these 9 steps are to better planning, and we'll talk about how technology plays a role in that. So that's really what we're going to talk about for the remaining part of my portion of the presentation. Just some different strategies to kind of get you from where you are today to where you want to be. So we're going to build up a little cake here in the middle in this little diagram. And the diagram really represents your organization. And you can see the little labels on there. And it's really the whole organization as a piece of a puzzle, from manufacturing to sales and marketing to finance and administration and operations. So we're going to build this up over the course of the next 10 or 15 minutes or so. And the first thing that we want to get out there and share is that you need to systemize your planning process. And what that really means to me is you need a system, and Excel is not a system. Excel is a great personal productivity tool, but it's simply not a system. And the next 9 best practices that we're going to outline, just functionality and other practices that will really show you how that outstrips the capability of an Excel spreadsheet, and why you need something more systemized if you're going to get to that next level. That point where you are a true business partner, and that's we all know that's the result of having enough process efficiency in your planning process and accuracy, so that you can spend time on the things that you really care about. And I think it's the reason why a lot of people may tend to get out of finance is what they thought it was going to be like when they got into it is not what it turned out to be. There's a lot of time still spent on reporting, and still not enough time focused on building those relationships, with the business, and that comes with credibility. So Excel can get you part of the way there, but as you think about this next step that you're going to take as an organization, building those better relationships, improving your processes, and building in more integrity into that plan and more efficiency into that plan, Excel just isn't going to get you there. So you need a system that's specifically designed for business planning, and that's really ultimately what a corporate performance management solution, or CPM solution, really does. Is it helps you drive financial and operational results in order to execute your business plan. That's about as succinctly as I can say it. And it does that by eliminating bottlenecks and inefficiencies in the business process. So when you think about broken links and formulas and manually rolling up or aggregating your data, these things essentially go away with a CPM solution. They're automatic. I mean, that's what you should expect from a tool like that, if you're out and when you're looking for a CPM tool. And they're done in real time. So no more shooting emails around with Excel spreadsheets, with the username and password, for the SaaS-based systems. You can log in anytime, anywhere, and in real time be able to look at that data. All the users can get in the system at the same time and see it. So, and just referencing what I said before, this leads to that additional time for the finance team. Finance teams want to add value, but to do that, they have to have the time in order to be able to do that. And it's not just related to finance; it's other parts of the organizations as well. And this time can be used for higher value activities. So the finance team can start working on streamlining the planning process, or just being more involved in analyzing strategic options. And they may even end up having more time, believe it or not, to maybe go out to lunch with someone in the business that they know that they work with on a regular basis. Get to know those people, get to build those relationships, to strengthen those future ties for the future of the business. And it's just not just reserved for finance. All department managers who are involved in the process are going to be able to free up more time to focus on what they want to focus on, and that's managing their business. So we talked about some of the process improvements that we can use to get us there. So the first one is really, the second one is rolling forecasts. So we've all heard about rolling forecasts. And really it's just tied to that continuous planning cycle. So we're continuously monitoring our business. And to do that, we're determining what are those factors, external and external, that are affecting the performance of our business. You have to be able to identify those factors, to make those better decisions about the timing of acquisitions, product launches, partnerships, among other things. So when you have the ability to look out 18, 24 months, whatever your business planning cycle is, you begin to make it possible for your organization to react more quickly to those factors that can impact your business. So if you think about what happened in 2008, and where your business was at that time and how you reacted to those set of circumstances, and then think about now, with the fear of a major debt crisis in Europe. Do you have the information? Are you monitoring your business on a regular basis so that you're in a position to make the right decisions to put you in the right position? So, and this is all just tied back to technology. You need a system. The challenge that we've seen with utilizing Excel in the rolling forecast process is that it's hard to keep those up to date, because it's not just a single forecast. You're creating a baseline, you're creating new versions, which are typically different versions of Excel that are saved somewhere that you're trying to organize, and then you're layering in your actuals as you go. Trying to understand the impact of minor alterations to that plan, and performing just basic variance and sensitivity analysis. So it's not easy to do in Excel. It's doable, but it's pretty difficult to do and do quickly to really meet your needs. So many companies are still utilizing Excel for their planning process. And while it may be cumbersome to get the annual plan right, it becomes even more and more difficult once you start rolling that plan. The third thing is initiatives planning, and these are really just those big what-ifs that are going on around in that planning process. So it's pretty typical that during the planning process, you've got your standard operational planning process that's going on. But this is often very compartmentalized, by department or maybe even by project. The business unit managers, they own those things and they're planning for them. But you've got these other things that are going on typically across the business, and they're more strategic in nature. Good examples are new product launches, acquisitions, divestitures, new channel relationships, building a building or a plant, opening new stores. So what we found is that when it comes to planning for initiatives, it's better to have the ability to layer them into the plan. And what I mean by that is you want to be able to consider them separately and not have them mixed into other plans or spreadsheets that are floating around the business. So let's plan for those as a separate activity, and then let's give ourselves the opportunity to ask, what if? And what this really comes down to is there a separate process for approving or disapproving those plans that really automates the process of building the effects on your P&L and your balance sheet and the effects on CapEx into a plan, and automates it so that when a certain initiative doesn't get approved, there's not a manual process involved where you're decoupling all those initiatives and all those things that may happen, those large what-ifs, from your plan. It's all automated. And then we get into strategy and execution, which is really where we're driving towards, that fact-based decision making. So we talked about the strategic plan at the beginning of the webinar, and how crucial it is to have that cohesiveness between your organization's strategy from a corporate perspective, and even throughout the organization, and tie that into the operational plan. So to do that, we're recommending that you create driver-based plans whenever possible. So if you're considering doing this, and really the goal here is to increase that efficiency and accuracy of the planning process, for in total and for your line managers, you've got to develop those drivers, and they've got to be aligned, such that there's a tie between your corporate strategy and the execution of that strategy. So if your strategy is primarily centered around product line expansion, then your organization would be more focused on cost production and product pricing. If you're focused more on acquisitions, then the operational ties may be very different. So I mean, the key here is that this is going to ensure that managers they're focusing on the proper drivers, based on your overall corporate strategy. Plus, they're going to be able to get in and out of the plan much more quicker, because you're not forcing them to go down to a detailed GL account level for every possible GL account to update their forecast or update their plan. It's kind of the 80-20 rule. You've identified the things that matter most, and you build your plan accordingly so that you can build efficiency and accuracy in that process. And at the end of the day, it's really about knowing the decisions that you need to make before you can move on, and that's done by being able to model out those different alternative scenarios. So moving more towards a fact-based decision-making process. So dashboards and scorecards. So we've gathered a lot of data from source systems. We've got some GL data from the ERP system. We've got some outside KPIs and other drivers from maybe some subscriptions or some ones that you've created on your own. We created our plans, and now let's just talk a little bit about how do we get to that data, and how do we report on it, so we can ensure that number one, you have managers who are managing by exception. They're not reviewing 100 lines of a report every day. They're looking at the things and the KPIs and the true drivers of the business that matter, and really drilling down from there. And that really leads to holding them accountable to own that data, own their business, and own those decisions. And it's really about adding intelligence to the data, adding some context. It's not just a bucket of numbers anymore. And this is really what scorecarding is all about. And it's true if you're at a point where you're just using it for data visualization and managing by exception, or if you've got a true balanced scorecard methodology that you're either rolling out or have rolled out in the past. So when you think about scorecards and dashboards, you can't really control a process or initiative without understanding the metrics related to those processes or initiatives. You need to be able to plan for them and measure them against actuals to really understand if you're meeting your goals and objectives of those particular initiatives. Operational data, kind of the next layer of the cake, if you will. And it's really all about including that operational data into your plan. So we talked a lot about financial information and data, but we also want to be able to include that operational data as well. And just some examples. Think about things such as service business. They're going to be watching utilization percentages very closely. So they can utilize this type of operational data in the plan to help them view their business, measure their business, and understand whether or not they should make key decisions. Do they enter a new market? Do they raise rates? Is their utilization so high that it's sending them an indicator that their prices may actually be too high? Which everybody wants to be in that situation, right? So it's really about having that information at your fingertips, for finance, for the line managers and executives, to being able to better understand the business, so they can either identify further opportunities to grow, or maybe even pull back if that's the right decision. So again, focus here on better fact-based decision, and putting yourself in a position to model out the effects of those potential decisions before they're made, which is really the key. KPIs and their role. Having KPIs driving decisions that are being made, it really helps to inform and provide some intelligence to the data that's being generated. And we typically, if you think about dashboards and scorecards, that's really where you're going to incorporate them, and that's really the underpinnings of those tools. I mean, that's driving management by exception and focusing on only the things that matter. And we typically break out KPIs into two categories: the leading indicators, orders for capital goods, building permits, new housing starts, and lagging indicators, which includes financial statement information. You need to be able to reference those numbers, but they're not necessarily there to really drive your business. Long-range plans and scorecards, kind of almost towards the top of the cake here, in a future state point of view. And really, we're just talking about extending off the rolling forecast time horizon, 18 months, 24 months, 12 months, whatever it is you decide based on your business cycle. And this takes us to be able to look out even further into the future. So try to take a look at how those assumptions that you're making today in your annual plans or your rolling forecast, and determine what their relationship are with the long-range plans. Is there a cohesiveness there that we talked about before? And I think one way to do that is to turn your plan into a scorecard. So as you progress through the iterations of your rolling forecast, this provides you kind of a way to measure yourself against those long-range plans. So it's just another tie between corporate strategy, finance and operations, and or better yet, kind of another way to tie those two together. And the question really is, are those decisions you're making today, are they in line with your organization's long-range view, their long-range strategy, and vice versa? And finally, to end this section, let's just talk about scenario modeling. This is the kind of the nirvana where you want to be, to be able to model out those decisions, so you can make good decisions quickly with all the data that we've talked about before, and leveraging technology that's going to be prevalent in a corporate performance management application. So, I mean, when you look at all the things we've talked about, rolling forecasts and planning initiatives and utilizing KPIs and operational data, with all this, at the end of the day, you've got to be able to create scenarios using this data. It's got to be easy. It has to be quick and accurate, so that if you want to reforecast every week or have 1,000 scenarios, you can do it and not have to worry about what's performance going to be or how much is that going to cost me. So, these scenarios really are just other what-if models. What if we open 50 new stores? What if a particular currency relationship is gonna spike because of events in Europe or Asia or the Middle East? What if we build a new plant? So these scenarios tend to be baked into the model to allow much more flexibility in the planning for your business, and also to present those alternatives and possible outcomes to the primary strategic business or decision makers in your organization. So the business leaders, at the end of the day, need to be able to see the full, financial implications of those decisions, both from a risk and return point of view. So, I guess finally, one last thing on this is, you need to be able to add those new, what-if scenarios. Like I said before, you've got to be able to do it quickly. It's got to be, easy to understand, and you need to be able to do as many as you need to run your business. So, look out for limitations when you're looking at different products to do that, because we feel that that's pretty important. So with that, that is the end of my section, and I'm going to turn it back over to John.
Great. Thank you very much, Rob. Appreciate that run through. At this point, we're going to get into the first of our 3 polling questions. I'm going to go ahead and launch that right now. Once again, if you're here for CPE credits, you must take this question in order to get the credit. Even if you're not here for CPE credit, this is more statistical in nature, and we'd love to see where folks stand, and we'll actually expose the answers to this and the other polling questions when we get into the Q&A section later, so you can see where everyone stands. So please take just a few seconds to take a look at this and give an answer. We're also going to follow this question up with another polling question that's related, and then we'll move into the second part of this morning's webinar. So we'll go ahead and leave this open for another 5 seconds, then we'll jump into the next polling question. Okay, here we go. So we'll close that one out. We'll jump into the second one. And as you'll see, this second polling question is directly related. And once again, if you'll just take 10 seconds, we'd appreciate this. While we're letting folks weigh in here, I'll go ahead and remind you that you can ask questions at any time. We will do our best to get to all the questions when we get to the Q&A period, which will be after this next short presentation in our event. Also, as a reminder for those who came on late, we will be sending out a link to a soft copy of today's presentations. You'll get that within 24 hours, and the presentations are, in fact, already posted at proformative.com/resources. So for anyone who's wondering how do I get my hands on the presentations, soft copy is already available, and we'll send links out to everyone who attended within 24 hours. Okay, I'm going to close down this second polling question. Thanks, everyone, for jumping in there. At this point, I'm going to go ahead and get us started with our next speaker. It's my pleasure to introduce Eric Reed, who's a financial analyst at Advanced H2O. Eric has 8 years of professional experience in corporate FP&A departments. He graduated with a BA in Business Administration with a double concentration in Finance and Information Systems. Upon graduation, he was hired at Washington Mutual as a Finance Leadership Program Associate. And after 4 years, after 4 years at Washington Mutual and a 2-year stint at Aviation Partners Boeing, Eric joined Advanced H2O in 2011, where he was responsible for financial forecasting. Eric, please take it away.
Thanks, John. All right, so it's a quick agenda here for my presentation. It's going to give a quick background on Advanced H2O, talk about some of the challenges and requirements that we had with our forecasting and budget system, the implementation process that we went through with Host Analytics, and some of the benefits that we've seen thus far since going live with Host. So Advanced H2O is headquartered in Mercer Island, Washington, which is just outside of Seattle. We have 5 plants throughout the U.S., located in Burlington, Washington, Stockton, California, Dallas, Texas, Hamburg, Pennsylvania, and West Valley, Utah. And we are one of the largest providers of private label bottled water and water-based beverages in the U.S. Some of the products that we provide are spring water, purified water, tea and flavored teas, flavored waters with vitamin enhancements, kids flavored drinks, which include products such as Crayola coolers, a couple of new products that we're working on right now too, called a fruit punch and a citrus fruit punch, and then also a couple of flavored lemonade variations that we're hoping to have out in the market pretty soon. We have a variety of package sizes that we also use, ranging anywhere from 8-ounce sizes to 4-liter containers, and anywhere from 8 packs to 35 packs, or 1 liter, or a single 6-pack 3-liter and 4-liter containers, both in flat caps and sport caps. So there's a lot of different options to choose from for our customers, which what we'll see in a minute here leads to some challenges in our forecasting model. So some of the challenges that we saw with the process really tie into what Rob had been saying earlier. And just a little more background, I guess. I joined the company in 2011, and when I got here, my boss had already kind of identified that there was a need to make a change with the process. So I was kind of given, I was kind of thrown into the deep end right away, and we were starting a reforecast process so I could kind of see what the process looked like currently and kind of go through that process right away. And wow, that's all I got to say right now is just how my mind was boggled on how difficult and time-consuming their current process was. So their old process consisted, is all Excel-based, and we had 6 main Excel files, one for each of our plants, and then a roll-up file. And each of these files had upwards of 110 tabs in them that each needed to be updated in some way or form. So you can imagine that's a lot of manual work right now, and leads to a lot of areas where mistakes could happen, which, as Rob was saying earlier, it inhibits version control, a lot of broken links or possibilities for broken links, and if there is an error, long nights trying to figure out where that error is at and what tabs and what files need to be adjusted, and what cells in those tabs need to be adjusted to fix that error and have it roll through the entire process. So when I first got here, Advanced H2O basically did a plan session towards the end of the year for the upcoming year to figure out their plan. And then if time permitted and was requested by our board of directors, they would maybe do 1 reforecast a year. So you're looking at trying to operate a company with only doing 2 forecasts a year and having accurate data throughout the year to manage your production schedules and give accurate financial projections to our board of directors. As you can probably imagine, not the best way to go about in terms of being up to date and the latest changes with your customer requirements, changes in the environment, weather changes which drastically impact demand for water or teas, especially in the summer months. And with the old process, with the amount of tabs that needed to be updated and files, it made scenario analysis virtually impossible to do, as any little change would take upwards of 2 days to 5 days to incorporate through all of the different various sections that it would need to be incorporated into. And so with the amount of time that it would take to do all the different scenarios that we might have wanted to look at, there just wasn't enough time in the day to make that happen. So scenario analysis was virtually not a possibility in the old process, and made looking at what if we wanted to bring in a new line or potentially bring in a new plant and add X amount of additional capacity, how would that affect our revenue? It made those scenarios impossible to do. So we would have to do a lot of stuff on the fly and just kind of take a best guess at a lot of those situations. And then also with the old process, the data that we ended up with in the format was not in any type of database. So you've got all these different tabs again, going back to Excel, and it just made it very hard to consolidate the data and use it in any type of useful analysis. Simple questions that would be asked that if the data was in a useful database should only take a few minutes to run and pull would take a couple of days, because you have to pull from so many different sources and consolidate it and then do the analysis after that. So some of the things that we were looking for in a solution was that first and foremost, we needed to have very little IT support, because our company is pretty small. We only have 1 IT person, so we needed something that essentially finance could maintain on its own. and have outside support look into issues that we had when needed. And then also be able to forecast at a very granular level. As I'd mentioned earlier, we have a lot of different pack sizes and a lot of different products, but the way that we forecast and the detail that our board sometimes requires us to forecast at a plant level, by customer, by product, by ship-to location. So it's pretty low level of forecasting, which was one of the reasons why I had so many tabs in our Excel files, but also creates challenges with finding a system that is capable of going down to that level of detail and forecasting. We also wanted a system that would allow us to make some high-level assumption changes and use drivers to flow through the entire forecasting system, you know, where we could just drop in one number and have it flow through and not have to go through multiple changes of the same driver in multiple different locations. We needed a system that was obviously affordable and one that would allow non-technical users to easily navigate through the interface. So with the business needs kind of identified, set out to put together an RFI and sent those out to various vendors looking for the best fit for our company in terms of having something that could go down to the level of detail we needed in terms of forecasting, was simple to use, didn't require a lot of support, something that we could hopefully implement pretty quickly because we were trying to get the ball rolling on this and get out of Excel as our planning tool. So after consulting with a couple of different companies, ultimately decided that Host Analytics was the best choice for us and ended up signing it in August of 2011. So that set off our implementation process where we provided various samples of our budget templates and walked them through the painful process of what our current process looked like, and then trying to map out, all right, how can we simplify this and how will this look, what will this look like in Host? So unfortunately, with the timing that we had, with the signing in August, we typically start our plan session in August, but we're trying to do a very, very aggressive implementation in hopes of using Host to do the plan for 2012. But with the complexity that we had in terms of the level of detail we had and trying to map everything out, we ended up having to put implementation on hold for a while I went back and did the old way and got our plan done just because we needed to get it done. So we kind of went on hold from probably about beginning of October through January while we finished our plan process, and then picked it up again towards the end of January with Host and finished implementation, which Host was fantastic with, making sure that all of our issues were addressed, testing out all of our process runs to make sure that the templates would work the way that we thought they would work, that we were able to capture the detail that we needed to capture, and that it was as efficient and easy as possible. So once these test runs were completed, working with some of their solution analysts, we were able to finally go live in March of 2012. And since that time, we have already seen much, much faster turnarounds in our forecast. From going from a once-a-year plan session and a once-a-year reforecast, we have gone from doing those 2 times a year to now doing a monthly forecast where we can go in and do our revenue forecasting and bring it all the way down to the P&L level and see the impact that we're going to have each month. So what would take before 2 to 3 months for a reforecast now takes about 3 weeks, 2 to 3 weeks from start to finish. And so we're able to do a forecast each month now. Our plan process, which before would take upwards of 4 months. Right now I have scheduled to take about 2. We're going to be starting here in the next month with just gathering some of our basic volume information from our sales guys and starting to get that put in the system with a target date to end plan by the beginning of November. So dramatic cut down in process time and also the amount of work required by other FTE in our company. Along with the improved process time, there's also been much higher data quality. There's less points of, there's less sections that are vulnerable to human error, as much of it is automated now, so I don't have to worry about broken links or having gone in and did somebody enter in the right number in this spot for this driver, because it's the same driver. The same driver will flow through all the different tabs and different templates without me having to go into each of the individual tab and enter in that same number in the same cell, and so that just gives us a much higher confidence in the data that we're looking at, and allows us to do a lot more of analysis and be sure that what we're looking at is truly what's going to happen. Along with that, the ability to actually do scenario analysis now, with forecasts only taking a month now, and small changes being able to quickly flow through the entire system. Just having that ability has just been awesome. With the amount of growth that our company is seeing right now, we're still continually looking at what would the impact be if we're going to add a new plant or add new lines to current plants, and to be able to turn around and tell our board, all right, well, if we add this much capacity with these volumes for these customers, we're going to see this much additional revenue or this much additional to our bottom line. So the next step for us now is to continue to look at how we can incorporate hosts more within our company and expand some of the functionality it has, because hosts has some great features in terms of executive reports and being able to tie in with their accounting systems and use it for close, which we're currently not doing, but is something I'm going to be looking into within the next year, is working with our accounting departments and how we can get them integrated with host and use that to hopefully shorten up our close process and just turn this more into a robust forecasting system for our company and just utilize all the benefits that the host has. So we're definitely looking forward to what the next year is going to bring as we continue to explore the growth that we have between Advanced H2O and host, and how it can continue to help us grow and be proactive versus reactive in looking at data. So with that, I would like to turn it back over to John.
Great. Thank you, Eric. It's always nice to hear from people who are actually implementing solutions live that we're here to talk about in general. And we do have one more polling question. Let's knock that one out really quickly here. I'm going to launch it right now. Once again, if you're here for CPE credit, we do need you to take this. But even if you're not here for CPE credit, please give us 10 seconds and take this, and then we'll take a quick look at the consolidated answers in just a moment. Also, a quick reminder, when you step off of the webinar, because we're getting close to the end here, when we step off at 10 a.m. Pacific time, 1 o'clock Eastern, you'll be prompted to take a quick survey. Please do give us 1 minute of your time. We'd like to know how we can do better the next time. Plus, if you would like to be connected with either of today's speakers, Rob or Eric, it's just a click of a mouse to request that, and then we're more than happy to make that connection. All right, at this point, we're going to close out, and let's just real quickly here take a review, as I promised earlier, of the results from the polling questions. And here I'll share out the first polling question: which of the following is the highest priority area for improvement at your company? Budgeting, reporting, consolidation, analysis, or nothing, or I suppose other. At this time. So Rob, taking a look at this is interesting. Analysis is pretty much 2x. The numbers 2 and 3. Is that fairly typical for what you see amongst clients?
Yeah, I think it is. I think there's a real focus on core needs, budgeting and planning and forecasting, and there's also a real push and kind of acceptance of using drivers and KPIs to manage by exception. Excuse me. So I think this is right on.
And Eric, when you got to H2O, was it that the whole system was so broke you could hardly do any of this, or what was your highest priority at the time?
It was difficult. The biggest thing was, definitely improving the process time because it took so long to get everything done. Budgeting to the point where you can only do it twice a year. Analysis, oh my goodness. I mean, I'd have to literally pull from 3 different sources to pull and then consolidate everything and then break it out when, if everything was in some type of database, it should have been, a 5-minute exercise, but would end up taking me 2 to 3 days. So.
I have to say, I pity you. I've never seen anything as bad as 6 roll-up spreadsheets of 110 tabs each. That's just madness.
Yeah.
I'm sure you're happy to be out from under that. The second poll question of the areas of improvement, what are those that need the most change? Process is top, and then technology number 2. Rob, is that fairly typical?
Yeah, I think it is. I mean, certainly there's a people and process issue, related to all this, but yeah, I mean, technology is going to be a big component, but it's all about the underlying process as well. So yeah, I think it's pretty accurate.
And Eric, how did your processes change significantly when you went to the new software, and how have your business partners responded to that?
Our process have changed a little bit. It's just trying to become more efficient, so we've been able to cut out certain aspects of our old process. And for the most part, everybody's been on board. The key people were the ones that were actually, initiating this and saying we need to change this because we can't do what we need to do in the time that we have to do it. So that was something that was definitely beneficial, and I didn't have a lot of hoops to jump over in that regard. So.
Gotcha. And speaking of which, one last polling result. And this question was, collaboration between finance and operations in my company's budgeting and planning effort is non-existent, limited, acceptable, but needs improvement in where it needs to be. Where was H2O before and after now, Eric?
I guess that would depend a little bit on how you ask. If you had asked me coming from where I had come from and having the systems that I've been already working on, I would have said they were totally unacceptable and definitely needed some improvement. Some of the other guys here, they're probably like, oh, we can kind of deal with this, but to me, they definitely needed improvement and just needed to be fixed. So.
Well, it's an interesting point you make. It's hard to know what you're missing if you haven't lived with something better.
Yeah.
And I've come into a lot of situations in finance where that's been the case. And then when you get it in place, people's eyes are opened up. A quick question, Rob, is from the audience here, is Host a cloud-based solution?
Yes, it is. It is a software as a service solution, and what that really means is, number one, access from anywhere, anytime, as long as you have an internet connection and a username and password. And number two, no real, worries about the technology side of it. We handle all that for you. So there's no equipment to buy, no upgrades to go through. We handle that. We come up with, we have monthly updates, quarterly releases, and that's, done by, in our data centers by our people.
Excellent. One more really quick question before we get to the close-up stuff. How many spreadsheets does H2O use now in your budgeting and planning process?
Just a few. There's nothing. It's really ad hoc files just to do like support, to do some calculations that right now is still easier to do outside of the system, and then to enter those numbers into Host. But it's nothing like before. It's like a file here or there with a tab or two maybe.
Right.
It's just more to do some of the stuff that we don't really have in the system. It's just kind of offline stuff that we just want to calc and then take that data and then enter it in.
Gotcha. Great. Well, I'll tell you what, with that, we are running to the end of our hour. So first off, a big thanks to Rob and Eric for your time and the information you brought today. I greatly appreciate it, and thanks for joining us this morning.
Thank you, John.
Thank you. It was a pleasure to be here.
Great. Pleasure having you. Once again, you'll be prompted to take a short survey. We greatly appreciate your giving us a minute of your time to do that. Please join us at Proformative.com at any time to ask additional questions you may have and continue this conversation online, or frankly, any other questions around the subjects in finance, accounting, and treasury. If you have any questions about CPE credit, please contact Tanya Walsh. You can see her email at the bottom there. She is more than happy to help you out and make sure you get credit. Finally, another thanks to Host Analytics, our sponsor today. Through their generosity, we not only got great information today, but as always, the information came to you at no cost, which is part of what we're all about here at Proformative. So we love that. Thanks to Host Analytics. And thanks to everyone for giving us an hour of your time this morning. And with that, we'll let you go. When I shut this down in just a moment, you will be prompted to take that quick survey. So thank you so much, and we hope to see you again at another event on Proformative or at Proformative.com online. Take care, everyone.